Alrighty. Well, today we're joined on the show by the managing director and CEO of Raiz Investment Limited, George Lucas. And we had George on the show in October last year. I went and interviewed him in the Raiz offices, or they were previously Acorns offices, and we had a great chat all about George's history and what Acorns is all about. So we've got him on the show today to discuss a couple of major changes that have occurred to his business over the last 5 months or so, and looking forward to getting stuck into it. But George, I think one opening question that I would like to ask you is what's one thing that you think millennials need to understand more about investing?
The one thing, I guess, is kind of the emotional attachment. And we've just done some research, but doing investing on paper and doing investment in real life is completely different when you've got your own money at risk and you have to be prepared for the stresses caused by the markets going up or down, etc. And I don't know if everyone is prepared for those until they've actually got money going in the market.
Nice one. So I guess are you saying that we should all be just taking our chances and getting in the market to overcome that fear, or?
Well, I think you have to start off. You don't put everything at once. You put a little bit at a time. You invest a little bit, and you see how you go, and see if you're comfortable with the types of losses or gains that you will make, and you will make losses if you're invested into an equity market. And then, as you become more comfortable and you begin to understand your own risk tolerance, you can then start building your portfolio.
Yeah, I definitely think that's something that I learned the hard way, just how emotional it is when, it's your money on the line early days and you see the numbers going up and down. So yeah, I think that's definitely good advice.
Yeah, and it's completely different than reading it on a newspaper where you say, or, looking at where you're kind of playing with pretend money. It's completely different when it's your own money at risk.
Yeah, definitely.
Yeah.
So, George, for the listeners that haven't listened to our last interview, we thought we'd just start off with a brief introduction into your background and how you got to where you are today, and sort of your investing journey as well. So, yeah, what's your career and what's your background up to where you are now at Raiz?
Okay, so I'm quite tired and old. So I actually started in the markets in the middle of the 80s. I actually did a degree in Bachelor of Science, which was majoring in computer science and applied mathematics, which at the time was quite in demand because they just had this new invention called the PC, and it was going onto all these desks, all these trading desks. So I actually got a job in London at a bank called Chase. I'm running programs initially for, traders who are getting these new fangled computers called PCs on their desk that they were using because at the same time the UK market had just begun liberalizing. And I started to learn about algorithms like, pricing options, etc. And then eventually I ended up what they call a quantitative analyst and working for banks like Citibank, where, I started off and eventually became the head trader for equity derivatives out of London, and then went to First Chicago to do the same thing. And then after a while in the UK, I came back to Australia and went into retail funds management, funnily enough, mainly around property and infrastructure, and then set up my own company called InStreet. And then in about 2013, we began to investigate, providing, products online. And that led us to the journey of Acorns, which eventually became Raiz.
Interesting. So what did, prior to 2013, what did InStreet do otherwise?
Well, InStreet issued products for financial advisors. So structured products to financial advisors. So it was backing off my equity derivatives, my derivatives background, and designing products which went into self-managed super funds that allowed people to manage the downside risk. Rather than just having a normal type distribution, you could actually say you won't lose more than this.
Yeah, right. And out of interest, why did you decide to, leave the bigger investment banks and pursue something on your own?
Because I'm not very good at working in a political environment or in large organizations. I like to move very quickly, and that doesn't necessarily work at a large organization. And so, it just didn't suit me from a personality point of view.
Yeah, fair enough. So, as I mentioned at the start of the show, we got you on here, George, to discuss what is now Raiz, but previously known as Acorns. And, you've gone through a big brand change, and you've also done a IPO, initial public offering. So for those that are unaware, can you just give us a summation of what Raiz is and what it offers to millennials and I guess anyone who's interested in getting into the market?
Well, Raiz is exactly the same as Acorns. All we did was change the name and change the colors associated with the name. Otherwise, it's still the same micro investing platform. It allows you to invest in the markets. It has a very limited choice, but you can start off with $5 to get fully invested in the market, and you can choose one of 6 portfolios, from a conservative portfolio to an aggressive portfolio. So the aggressive portfolio will have more in equities, and the conservative one will be very heavily weighted to less risky assets like bonds and cash. And then we also have a socially responsible portfolio. And then it offers a lot of features to help you save in the background of life. So obviously the one that is, I guess, the most well known is the roundup feature, where you link certain spending accounts, and as you spend like $3.50 on a coffee, 50 cents is rounded up into the market and is saved for you. So as a individual, you don't actually have to start off by saying, how much do I need to save a month? Just by using the roundup feature, as you spend, you'll also start to save. And then the other automated features, like you can set up saving plans, or you can set up a goal that you want to save for and save for that. And then obviously you can just put in, I want to put $100 in today into the account.
Yeah, nice. The roundups is quite a powerful little a feature for those who really want to get into the market and absolutely have no idea. I remember being at a party once, and one of the girls there had signed up with Acorns, months and months ago, and then had actually forgotten all about it, and then logged back in, and purely due to the work of the roundups, she had a few $100s in there that otherwise she wouldn't have had. So it's a great little platform invested in the market. So it was good.
It's like in the old days when you used to put all your loose change in a jar. And at the end of the year, you'd go, oh my God, I've got more money than I ever thought.
Yeah, it's the 21st century version of that.
It is the 21st century version of that.
So how did Raiz actually come to be in Australia? Because I know Acorns, started off in the US. Can you just give us a bit of a history on how it came to be in Australia?
Sure. The US began, when they first started off, they began looking for joint venture partners globally, not just in Australia. And they actually had found one at that time and they were further down the track with a group in South Africa. And then because of my IT skills, but also my market skills, I was introduced to them by my lawyers. And that's and then we set up the joint venture here in Australia. And, as I said, I like to move quickly and I would just like to get things done. And so I just got it done. And before everyone knew it, Raiz was set up in Australia. So we launched, less than just over a year after the US launch. But I actually began talking to them before they actually launched in the US.
So, George, that brings us to the first major change that we were hoping to talk about today, and that was the brand name change from Acorns Australia to Raiz. So, to start with the basics, why the change in name?
So, there are kind of 2 reasons. One is, in January this year, the US and I, we didn't part company completely, but we pretty much parted company completely. They still have quite a large holding in us, just around 8%, 9%. But we don't really have any more cross-sharing of products or IT anymore, or IP, sorry. And so as part of that deal to move away from the US, we had to change our name. So that was as part of that deal. And so, we were both going on slightly different product paths. We kind of had a different vision. We were more seeing it still as an investment type platform, where they kind of saw it more of a banking style type platform, I guess. And so that's why we kind of parted ways. And then secondly, Acorns, the concept of acorns, and you plant acorns and it grows into a mighty oak tree, is a very common term in financial services. So there are lots of companies called Acorns, and it was causing a lot of confusion, and mainly for the companies who had already kind of had Acorns in their name, and so it was better from that point of view also to rebrand.
Interesting.
And I guess the next question that comes out of that is the name Raiz. Where did that come from, and how did you go about making that decision?
Correct. So if there's any other bit of advice I can give someone, come out with a name for a company in financial service is the hardest thing ever. Yeah. One, because it's such a fragmented industry. So every name that you think of, which is fantastic, has already gone. Yeah, not that Raiz isn't fantastic, but every name that you think of is already gone. So we started off with a list of 500 names, yep, and ranked in order. And then we go to the first, you go to the first 50 names and you Google them and they're already gone. So then you go to the next 50 names, and when you start Googling them, maybe 10 of them will be available. And then you go to your trademark lawyer and you say, okay, can we trademark this name? And they come back and say, no, there's a high risk that it won't get through trademark. And so eventually we had to come up with a name which in English was slightly misspelt, I guess, for want of a better word, because it was less likely that it would create a trademark issue or that it had been taken on Google. And we were actually, polling people about the names, but we just kept getting knocked back by the Google machine or our lawyers on trademark. And as we went down to the list, we got to Raiz and it passed everything. But at the end of the day, it's just a name. And so if you think of Google, we all know what it means now because of the brand that they've built around it. And that's about the experience that you have with Google and that they keep their promises, of what Google will deliver you. And so as long as we keep our customer service level high and, build this personality around the Raiz brand, which is that we deliver what we say, it's just a name. It's really more about the service that we offer people and the way that we offer it, which is far more important than what the name is.
Yeah, definitely. So
does that make sense?
Yeah, it makes sense.
Absolutely, yeah.
And I guess the question, so you had a list of 500 and you were working down that list and eventually Raiz worked and fit all the criteria. Where was Raiz on the original list?
It was in the top 100.
Okay.
What was number 500? Can you remember?
No, I can't remember. It would have been something like, there were some funny ones like Bambooey and stuff like that.
Yeah, right. How did you all just lock yourselves in a room for a period of time and said we need to come up with 500 names and go from there?
No, we live in a world of online. So there are actually websites that you can go to and you run competitions like come up with a name and the winner will get $500.
Oh, yeah. Okay.
Yeah. And you can generate a hell of a lot of names.
Right. So you got the market to generate for you.
Yeah.
Oh, not bad.
Correct.
So obviously you were saying there that it's more about the service that you provide rather than the name itself, which I can certainly understand, but obviously Acorns was a very recognized brand and name and had established a great image behind it. So I imagine that the rebranding process is quite difficult and has provided a lot of challenges. I'm wondering if you can compare the rebranding experience that you've just gone through to actually sort of starting a business and talk us through some of the major challenges that you've found.
Starting a business is, you start off with one customer and then you get 100% growth when you get to 2 customers, et cetera, et cetera. So, and you're building your brand the whole time. When you change a brand, it's kind of, you have to think about what you were just talking about. We have a lot of word of mouth capital out there. And how do we change the brand in a way that we don't, destroy that word of mouth capital too much? We knew we were going to lose a bit of it and we know, we have to spend money to rebuild that word of mouth.
Yeah.
But we have to minimize losing that word of mouth. And so, that's kind of the discussion that we have. And, at the end of the day, people talk about, you have to do a lot of pop-up communication inside the app, etc. And it's like, well, no, people, when they open the app, they just want to go, oh, it's changed, but I now push this button and it does exactly the same thing as what it did before. So most of our rebranding communication was more concentrated on that kind of word of mouth that was out there. and trying to make sure that people understood that Raiz was the same as Acorn. And it's a long process. We only rebranded 2.5 months ago. It's still probably another 3 to 6 months. Yeah.
Yeah.
And then you have to deal with people who love the Acorns name and go, I hate Raiz, so I'm leaving the app. And then you've got other people who are going, we're quite happy that you've become an Australian company and we think that's really great. But the majority of people just go, oh, the app does exactly what it did yesterday and as today, and so I don't really care. And it's the same company behind it and whatever, but that's for our users. It's more about how do we, as you pointed out, how do we keep that word of mouth capital out there so that people understand it's the same. And that's just the type of thing that we've been concentrating on.
Interesting.
So, George, you touched on it earlier, but we're interested in what the partnership and what the relationship with the US company is now. Did it make you change? Did you have to recut the portfolios from scratch, and did you have to develop all the tech from square one, or is it still sort of a lot of Acorns America in the new company?
Oh, it's still a lot of Acorns America in the new company. But before we even separated, we had rewritten about 60% of the stack, the IT stack ourselves anyway. A lot of the IP we had written over the last 18 months up to the rebrand. So we had the resources, etc., but it definitely starts off with the US core. Yep, for everything. So we didn't actually have to kind of go back to square one. It was just moving on. It just continued to move on. And from our point of view, we had operated as pretty much a completely independent company from day dot anyway. It really didn't change that much.
Yeah, right. So does the rebrand in any way now, I guess, free you up to expand into markets outside of Australia? Is that something that's on the cards, or was that something that was possible when you were Acorns Australia anyhow?
It wasn't as possible when we were Acorns Australia, but it is possible now for us to do, and we're looking at Southeast Asian markets to do that. We are a fintech company and things are moving very quickly, so we have to be looking at them and preparing them and getting them ready now so that where we can launch pretty quickly and we understand it, and that's what we're doing now. But, our focus is still really on Australia, but we can't operate in Australia for 5 years and then go, okay, let's go to Southeast Asia now, because it is fintech, tech being the key term in this, and you have to move quickly in the technology space. You just can't wait, 5 years and then think, I'm going to bring this app out, because as they've seen, the Acorns app has been copied many times over in the UK, many times over in Europe, and it's even being copied here. And we just can't, if we want to capitalize on the technology we've just got to move quickly.
Yeah, fair.
So, George, wrapping up our conversation about the first part of the change, which is the rebrand.
Yeah.
How has the feedback from customers and potential new customers been? Has it been positive? Have customers dropped off because they're attached to the name? It might be too early to judge whether it's been a success or not, but so far, how's it gone?
Well, our customer numbers have grown, so there's definitely, we're still continuing to grow. Yep.
Yeah.
And our funds under management have grown significantly since we did the rebrand. So the business continues to grow. So the majority of our customers, I think, just went, oh, it's the same app as it was yesterday. It's just a different name, providing the same service, same company, and has stayed with the app. We have definitely had an increase in churn compared to what we had historically, I guess is a word to say. However, a lot of that will be contributed to the rebrand. Part of that will be contributed to shaky market at the end of March anyway. And part of it will just be, people don't like change. But saying that, we continue to grow and we are continuing to accelerate our growth.
Yeah.
Yeah. So then that brings us to the second big change that we were looking forward to talking to you about today. And that was,
Go for it.
Not only did you rebrand, but then you went public. So,
Yeah, God.
Boom.
busy time for you.
Yeah, I had nothing to do for 6 months, so I thought I'd just destroy myself.
So it's only recent. Was it the 21st of June that you officially were a public company?
21st of June, we're officially admitted to the board, as they say.
So I guess, this is a rare opportunity for us to talk to the CEO of a public company. So maybe if you can take us back to, you just rebranded. How did you make the decision to go public? What were the factors that sort of weighed on your decision? And then what was the process leading up to the 21st of June?
Okay, so it all started in October last year. Well, we knew the rebrand was coming, and so it was all combined together. Yeah.
Right.
So one of the things is that we needed liquidity to be able to buy the US out. Was one of the decisions. Yeah. And Australian investors like an exit. They like to know that there's an exit on the cards. So one of the ways that we were able to raise the capital for purchasing the US stake of Acorns, the joint venture in Australia, was by saying that we would list by June. And so that was one of the reasons behind it. So pick that reason. And that's really, at the end of the day, I really had we always knew that we were eventually going to become a listed company. It was just a matter of when. So that was kind of like, it wasn't like, oh, we've never thought about this before, let's become a listed company. It was something that had always been discussed. It was just a matter of when was the best time to do it. 2, it allowed us to raise more capital on top of that so that we could meet, our regulatory requirement. So a third of the capital that we raised is to meet our regulatory requirement. Because we're a responsible entity, we have to keep 50 basis points of all the FUM under management until we hit $5 billion. And our funds under management were beginning to grow quite rapidly, and I would not have been able to have enough cash capital to meet that requirement unless I was raised more capital. And so to do that, listing was the option as well. At the same time we list, we could raise capital for that regulatory requirement. It's only $1 billion of FUM under management, and we'll blow through that $1 billion of FUM under management, quick enough that we needed to raise capital. And then it allowed us to raise some more capital to solidify the brand, as we talked about, because it's an ongoing process. It's not something that's completed in a 2.5 month period. Okay, and they're kind of like the main reasons, but it also helped us to fund other things like development of the IT stack. It's mainly stuff that you don't see through the app. So the Raiz system is a lot more than just the software on the app. It's a complete end-to-end platform solution. So it runs a registry, investor communication, et cetera. So it actually sits on about 60 to 70 computers in the cloud at various times. Yeah. They scale up and down depending on the amount of work they have to do. It's actually quite a complicated system, and it's doing quite a lot. And in the last month, we've just migrated our database from, a standard, relationship database to a more of what they call a cluster. So this is called an Aurora cluster, which is a better big data solution, and allows us to do things like scale up databases a lot quicker if we need to for demand, and also to handle the huge amounts of data that we have, and also to build machine learning products to improve the user experience, etc., for the customer.
Nice one. So when you made that decision and you engaged an investment bank, I imagine, to start doing the roadshow, what was the process like of going around to different investors and different funds and trying to sell yourself as a upcoming public float?
Lots of dinners.
No, we wasn't many dinners, and there were lunches where 40 or 50 people would turn up, but not that many either. So the roadshows are actually quite short. It's not an extended period of time. It's, you're talking about a week and a half. You're not talking about a month of roadshows, because by the time you start the roadshow, you've pretty much got your prospectus finalized. And so it's a very short period that you're doing the roadshows, but you are doing 7 to 9 meetings in a day, telling the same story over and over again, and seeing some fund managers who just don't get your business at all, and then talking to other fund managers who get it at the drop of a hat, and then talking to other people who you go into the meeting thinking that you're trying to talk about your business, and they start selling you their business.
Interesting. Yeah. So did you invest in
more? You get all types. Yeah. But the key thing to me is that you're doing, as I said, 7 to 10 meetings a day, and you're saying the same story over and over again for a week and a half. So by the end of that week and a half, you're pretty much over the story.
Yeah, you'd know it back to front. Just for the...
Well, you actually knew it back to front before you walked in.
Yeah, you'd actually hope so.
Yeah.
For our listeners that are unaware of what the roadshow actually is, George, I mean, correct me if I'm wrong, but it's you going out there and selling the idea of Raiz and the IPO to potential investors and backed by the investment bank.
Correct. And you're talking to them and you're trying to illustrate where the value is in your business.
So let's talk about the IPO, the day, the 21st of June. I can imagine that it probably would have been a sleepless night the night before. And can you tell us? Oh,
but it should have. In retrospect, it should have been, but it wasn't. Now,
well, let's. So why should it have been? What was the list price?
Yeah, because we raised the money at $1.80. I mean,
yep.
You don't actually have to, tread gently here. I get what point you're trying to get to. We raised it at $1.80, and I think on that day it closed at $1.40. Yep, and then subsequently it's traded quite down from that.
So how much did you raise in the IPO?
But the interesting thing, so we only raised 15 million. So at $1.80 the company's worth 120 million. But out of that, 70% of the stock can't be traded. So for people like me, I can't trade my stock for 2 years, for example. And then some of the people who went in the pre-IPO can't trade their stock for a year.
Yeah, right.
Yeah? And some of them for 2 years. So what happened? They called it escrow. And so what happens is that the free float only ends up to be 20% of the company. So we raised 30% of the company. So we raised 15 million, but only 24 million is in what they call free float, which can be traded. Yep, everything else is locked up, and it comes off at various time periods based on ASX listing rules. And surprisingly, we had very low volume being traded. So when a lot of stocks IPO, it's very common to get trading volumes above 10% of the market cap traded in a day. And you would have heard stories about companies that, trade 100% of their market cap on the first day in value. Yep. And we only had 5% of our market cap traded. So it was a very thinly traded opening. And obviously there was no new news. It just went down. It's really hard to understand. I can't really comment on why it did that, even though I have my own opinions, but it's just unfortunate it did. I mean, nothing has changed in the business. Nothing changed from the presentation that we had done less than, just over a month before that. Nothing had changed from the information that we released in the prospectus. It's just that the market's attitude had changed. And why it changed, I don't know.
We were reading that you had quite strong support for the IPO from Asian markets and from Hong Kong. I guess the first question is, was what we were reading correct? And then the second question is, do you know why there was such a strong attraction from these Asian markets?
The answers are yes and yes. So, but just so that we're clear, there wasn't really, when we have a look at the breakdown, most of it went into high net worth individuals and to raise customers. The institutions didn't have a large size of amount of money that was allocated to them in the IPO process. But out of that money that was allowed for institutions, which was allocated to institutions, quite a large percentage went overseas. There are a couple of reasons. So we don't really have many. So Australia's not very good with growth. We don't really have many growth companies or growth stories here in Australia. We're much more conservative. We look at PEs and earnings, and we all sit here and go, oh, why did Amazon double in the last 12 months in valuation when they haven't made a profit? Yeah, because Australian investors aren't that great at understanding growth. And at the same time, we don't really have that many great growth managers here, growth CEOs. But in Asia and offshore, like in countries like Asia and offshore in the US, etc., they understand growth a lot better. And, one of the reasons obviously is that Australia is quite a small market from a population point of view, with only 23, 24 million people, while Indonesia is 290 million, the US is 300 million, Europe, you have access to over 350 million. So the concept of growth, is like, well, you might only get to 1% of the population, or, if you get to 10% of the population, it's 2.4 million here, but it's 30 million people in the US. But the other big difference between Australia and a lot of other countries is that when it comes to fund management, suddenly Australia goes from being a small country to the fourth largest country in the world of funds under management in the pension system. And you're suddenly playing in a global field. And that's the field that, that's the area that this technology is aimed for. And that's why we have to concentrate so much on the Australian market, and all the stuff coming out of the Royal Commission and the Productivity Commission, etc., around the way the incumbent financial institutions are treating their clients gives us a great opportunity to grow our business in that area.
Yeah, it's really interesting. So I just want to pick up on one thing you said there. So you said you raised money from high net worth individuals, institutions, but also from Raiz customers?
Yes.
Which I imagine isn't the norm for a lot of these IPOs, with the companies raising money from their customers.
No.
What was the process there? And do you think it was something that, if another public company CEO came to you to ask how that experience was, would it be something that you'd recommend?
We're in a very unique position compared to other companies where our customers are financial services customers. Yeah. And we have a very large customer database. So I know that a lot of companies will do that, will offer their customers a way to get in, and they might not get the same type of demand that we get. Yeah, we were over 4 times subscribed on the amount of money that we had allocated to our customers. Even our investment bankers were surprised how engaged our customers were in the IPO process.
That's really interesting. So speaking of customers, obviously Raiz is excellent for people who are new to investing with, the automatic roundups and predefined portfolios based on their sort of level of risk that they're comfortable with. But we're interested to know sort of what's the retention strategy going forward? As people start to understand markets better, is there the likelihood that they might move on from Raiz? And, do you foresee maybe perhaps offering direct access to stocks and ETFs in the future?
So the first thing is that Raiz is not necessarily either or product. It's not saying that, if you have Raiz, you can't have a broking account or you can't buy a mutual fund. And as you pointed out at the beginning of of this podcast, you had a friend who forgot that she had her roundups turned on and suddenly she had $200 in her Raiz account. So it's a way of saving. We're not going out there saying, this is the only product in the investment space, and so get rid of your broking account. Yeah, it's just another product that you should have, as well as all the other ways that you're doing, because the way it works is that, as your friend noticed, she didn't notice. She forgot that she had about it, because it's always just taking out small amounts on a regular basis, and so you don't affect your lifestyle. So that's the answer to the first part of your question. The answer to the second part of your question is definitely, and I guess that's another reason why we changed the name from Acorns to Raiz, is because as our customers grow, we want to grow with our customers. So that as they become more experienced in markets, etc., we'll be able to introduce other financial services products. So recently we've introduced a super product, which is also combined into the app. We've also been thinking about online broking products, etc. And the beauty about it is that we have such a large database that our customers really tell us where they want to go. Like they told us that they wanted a superannuation product. And if they start telling us that they want more control over how to build their portfolios or to be able to individual stocks, then we'll be able to deliver that to them. And so that as they grow, we'll grow and we'll become a much more mature financial services company.
That's interesting. It's good to see, good to know, and I'm excited to see these changes. Last time we spoke, you obviously mentioned that savings account sort of aspect, and that's one way that a lot of the users were using it. Withdrawing after they hit sort of a goal that they were saving towards to go on their cruise or whatever it may be. And I definitely agree that it's a great supplementary product for investing, not necessarily the be all and end all and the only one. So I'm interested, in the last 5 months or so, have you seen a change in the way that people are using Raiz as more and more people come to use it and understand it? Is it less of a savings account and more of a long-term thing, or have you noticed any major changes?
Well, we know that the account balances are growing, and we know that more and more people do have larger sums of money in there. So we have seen that. But the majority of people are still using it as a savings tool or to learn about markets. Yep. And not just to learn about markets, but also to learn about saving. As we know, and as we talked about right at the beginning, your financial situation can create a lot of stress in your life. So the Raiz app gives you a way of doing something proactively and empowering you to actually do something to improve your financial situation. And that's more about people using it for saving for a goal or saving up for a rainy day fund or something like that.
So, George, my ears picked up there where you mentioned super. Now, obviously, super is a massive, trillions and trillions of dollars in Australia alone. So there's a massive opportunity there. So what plans do you have to sort of go after that super market, and how are they going?
Well, we're not going to become Woolworths and go into the supermarket, but we are.
Hey, I work for Woolies. Come on.
Fair enough. But we don't want to have a third player in Australia. We just need to have that oligopoly. We launched our super product on Monday. We've been beta testing it for about a month and a bit behind the scenes, and it's up and running now. And it's obviously only early days because it's Monday and now it's Wednesday. But, as I said, this demand for a super product was driven by our clients, and they now have it. It's all integrated into the app. You don't actually, to sign up to super because you're already signed up to the Raiz app, you don't actually have to do much. You don't have to re-enter your name and your address, etc. It's just pushing buttons and ticking the options you want, and then off you go. And you get invested into the same portfolios that exist on the Raiz app. So if you've been using the Raiz app for a while, you understand the portfolios and how they behave in markets. And again, you'll be able to see in real time, in the palm of your hand, what your super balance is doing. Yeah. Whether that's a good thing or a bad thing, because super is a long-term investment, time will tell, but I do think it helps people realize, because people forget about their super and don't realize what their balance is. And, especially a lot of millennials, and they read a lot of press about, you have to start saving now, etc. When the moment they get a job, they start saving into their super. And so, it kind of, in some ways, makes them feel wealthier because they suddenly know exactly what their position is. Does that make sense?
Yeah, definitely.
They're not really as badly financially off as they thought they were when they look at their bank account.
Yeah. Now, with this super product, will the functionality of Raiz be combined with the super? Will you be able to round up into your super account, or will they stay separate?
You won't be able to. They'll stay separate, but you can do a transfer from your Raiz account into the super account.
Okay, cool. Talking about Raiz and super, your company seems to be in the middle of a couple of major investing trends that we're seeing around the world. One around making it easier and easier to put money into the market, and then another one around simplifying the investment products that are available, with the 6 portfolios that you offer. So when you look at the market, it's obviously getting more competitive in Australia. So how do you sort of see yourself continuing to sort of differentiate against some of your competitors that are coming into the market? Your Spaceship Voyager app, your Stake app, who are also sort of trying to jump on these investing trends?
Sure. So Stake is obviously more of a stockbroking style app than where you could go individual stocks. I hope. I may be talking out of school because I better wind that back because I've actually never sat down and looked at stake in its entirety. And then the Voyager product is more about just making the investment. It doesn't have the roundup features, etc., that we have. And so it doesn't help you accumulate and save money and learn about saving small amounts of money and how that can build up over time. It doesn't have things like the Raiz reward program, so that rather than getting, loyalty points, you actually get cash invested back into your account, etc. So, Acorns is really not about, we're not going out there saying we are the best fund manager in the world. We're giving you a tool that will help you, empower yourself to get on top of your financial situation.
Let's talk about Raiz Rewards there. It's something that I notice has grown quite significantly since we last spoke. I get a number of updates through the app, letting me know what companies and stuff I can participate in. Do you want to just give us a brief rundown on what Raiz Rewards is and what it offers?
Sure. So what Raiz Rewards offers is ability that when you shop at one of our partner shops online and you make your purchase, they'll invest a certain percentage or a fixed amount of money back into your Raiz account, which you can leave there and let it grow, or you could actually deduct it and spend it if you really wanted to. So we did last quarter, for quarter ending in June, we did about $78,000 worth of transactions for over 12,000 transactions. So on average, people were getting about $5 invested back every time they did a transaction online. And it might be with a Woolworths online or a Dan Murphy's, or when they buy a ticket on Virgin, etc. But, it was another way of, accumulating your savings as you do something that is completely normal and what you're doing anyway.
Yeah, it's a great concept, I think. Something definitely worth looking into. So I know we discussed it on the last episode, but it would be great to chat about it because it was very new when I spoke to you last, George, and that was the ethical portfolio. You were saying that there's a lot of demand for it. Are there any other portfolios that you're getting demand for at the moment and you're thinking of adding? So you've got this sort of 6 portfolio options based on risk and then your ethical one. Is there anything else on the horizon?
No, not for me. For my staff, who are all a lot younger than me, they love cryptocurrencies. And they're constantly telling me to put cryptocurrencies into the app. And I'm constantly saying, but I don't know anything about cryptocurrencies and we don't have any skills in-house of managing cryptocurrencies.
Yeah.
But they put a lot of pressure. And then they see do you ever follow an app called Robinhood?
Heard of it, yeah. It's on the horizon, but never seems to be coming. So
yeah, but in the US, they added cryptocurrencies, and they signed up a million new millennial users in a month on the back of that.
Wow.
But I don't know. The thing I struggle with, and I'm probably wrong, is it's very volatile. Cryptocurrencies, obviously, and it hasn't kind of calmed down yet. And does that really fit the style of, investing on a regular basis, small amounts of money, etc.?
Yeah, it's interesting, the demand for these crypto portfolios. And I think it's just representative of the fact that not a lot of us millennials actually know much more about crypto than, anyone else. But we, see something there and want to get on the bandwagon. And the easiest way is for someone else to create the portfolio and for us just to put our money there and cross our fingers. So I'm not surprised that they signed up 1 million.
Yeah, but it is quite, the way I look at it is that I remember when I started out in the markets, my grandfather, when he found out I was in the markets, always used to talk to me about gold. And I was going, why is he talking about gold the whole time? No one really trades gold anymore. But obviously in his time, gold was far more important as a financial indicator than it is now. And my grandchildren will probably start talking to me about crypto. Or I'll talk to them I'll be talking to them about shares, and they'll be going, what are you talking about? Why aren't you talking about cryptocurrencies and, the tokens that go with these initial coin offerings? Yeah.
Yeah, it's interesting.
Yeah.
I'm excited to see what happens with it all.
Yeah. It'll be very interesting to see how it all pans out.
Yeah.
There seriously is a lot more regulation that has to come in around a lot of this cryptocurrency, because there's still a lot of scams happening out there because it's just not regulated.
Yeah.
So, George, I was looking over your website and reading about the portfolios that Raiz offer, and it caught my eye that the Dr. Harry Markowitz, so one of the founders of modern portfolio theory, and a Nobel Prize-winning economist, had helped out in building the portfolios. So I was just interested to know, well, what was it like working with him, and how much has he worked on the portfolios for Raiz?
Well, I mean, it's always great to work with them, but the way we actually did the work was just by white papers. Yeah. So he would write what he thought, and then I would modify it, because we had to make the portfolios very, and he agreed that we had to make the portfolios orientated for the Australian market. Yeah. And then he'd produce efficient frontiers, and then we'd have a look at portfolios around the efficient frontiers, but it was all done mainly by email and, writing your thoughts down like in exam type papers.
That's really interesting.
About why you'd want to change it and whatever, and and that's how the collaboration worked.
Fair enough. So the portfolios are a little bit more than your straight index funds.
The portfolio, there was a lot of thought that went into the portfolios, and people would actually go to us, why do you have if I do my unconstrained optimization, they might end up with more in the US, for example, and less in Australia. And it's like, but at the end of the day, these are portfolios for Australian investors who are an entry-level product into the investment markets. If they only have a smaller amount in Australian equities, like in the aggressive portfolio, how do we explain to them how FX risk works? And, when the Australian dollar was weakening, everyone was going to me, oh, no, you need more in the US, you need more in overseas. And when the Australian dollar strengthens, all that conversation dries up.
Yeah.
So there actually we did a lot of work on how to kind of, for want of a better word, passively manage the currency risk. So it would get balanced out so that we would minimize that as well while having foreign exposure.
Fascinating stuff. I think that's a really good point to wrap it up on, George. So I just want to say thanks for having us on the show. It's been an interesting period for us to observe the brand change over the last couple of months. We've had a number of listeners writing into us and asking, if we knew anything about it and why the name change, what's it all about, has anything changed with the company? So obviously we thought it was a great opportunity for us to get you on, and I'm sure a lot of our listeners will now be able to sleep easy knowing that Raiz is the same product and the same sort of
exactly the same product, same service, but just stronger. We've just got more cash.
That's always a good.
That's always good. Yeah.
Yeah, we're actually better off than we were from a balance sheet point of view than we were before the IPO.
Well, there you go. So the key there is the IPO, I guess, and it was a really interesting conversation. As Alec mentioned, it's very rare that we get an opportunity to talk to a CEO of a public company, let alone get to talk to them so soon after an IPO, and it's a process that is quite fascinating to us. So thanks for sharing all that. And as I said, I know a lot of our listeners would have got a lot out of what you had to say. So yeah, thanks for joining us.
No, thank you very much for having me.